Hey, 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 this is your girl, Miss Maren UK, coming to you live and direct from UK, sunny Manchester to be specific. And I just want to bring you a quick breakdown on how to use the currency strength meter to trade foreign currency. Once again, you guys can reach me on my social media platforms. I'm Marenike Rich Inc. on Facebook and at Miss Maren UK on Instagram. Also, if you guys want to be personally mentored by me or want to check what live updates and events that we have, you can go to www.sayyes2forex.co.uk. So just a little bit about why I'm bringing you this training today. I thought it was so important for me to share what I've learned. I've been in this space now for 3 years, being the Rich University International Executive here in the UK. I just want to prove that it's never too early to learn something new. I've been shown the currency strength meter over and over again. You know, I've had different breakdowns and explanations, but I was never able to make it benefit me in my trading journey until just 2 weeks ago. And I really want to kind of share what that experience was like for me. So I've got some great gems in store. Like I'm very, very ABC 123, and I just thought this really enabled me to grow my account exponentially, like another 400%. It really is added extreme accuracy, and I'm using it with our flagship product here at IM Mastery Academy, which is the harmonic scanner. So just a little bit about how I got to this epiphany moment. And we have harmonic scanner training 4 times a week here at Rich University. And we were privileged to have none other than Babe Savage add her expertise to this area. Shout outs to Babe Savage out there in sunny Dubai. Whoop, whoop. Thank you so much. She was brand new to this training at the time when I connected a couple of Tuesdays ago. But she really enabled me to really have that kind of pin drop moment, and it blew my mind. So this again is the importance of always connecting to, you know, trainings, never being too old to learn or thinking that you've done it all a million times before. Guys, I've been using the harmonic scanner, like I said, for 3 years. You know, Rich University is paired with the best platform that has the top education globally and the top, you know, the top tools. So I just want to kind of share with you really quickly how I got to where I got to, and hopefully you can get there too. So again, this is going to be looking at how we can use the currency strength meter to enable us to have the most successful trades. So what is the currency strength meter? Well, it does what it says on the tin. It's basically telling you the strength of a country's currency and all the major crosses. So, you know, your booming economies. And you can find this really easily. It's a free website, and you can go to www.livecharts.co.uk/currency-strength, and it will bring up the current strength of that country's currency. So how do we use this currency strength meter? Again, I said I've been, you know, challenged for using it for my own personal trades, but this is how Babe broke it down to me and how I'm going to break it down to you. So think of a set of scales, guys. Think of a set of scales. Now, what do scales do? Scales basically balance out 2 things. Now, we're talking about currency here, so let's go ahead and place our currency pair on this scale. So for example, we can put CAD, which is the Canadian dollar, on one side, and then we can put it with the Japanese yen and the JPY on the other side. And what you'll notice is that the heavier currency will weigh down the scale on that side. Again, the heavier currency will weigh down the scale on that side. Well, how do you know which one is the heavier currency? Well, like you can see in the example, the Canadian dollar has a lot more colored bars, than the Japanese yen. So that would mean that the Canadian dollar is stronger because it's heavier. Think of it like when you're in the gym and you add those weights, you know, those weight bars to the machinery that you're using. Well, the CAD, basically, you have 6 weights on the Canadian dollar. So it's going to push down the scale at one side where the Japanese yen can't compete. It would need to have an equal amount of weights or more, you know, to push the scale back down to the other side. But because it only has 1 weight, it's weaker than the Canadian dollar. So I hope that makes some sense for you guys. Now, what does this mean in relation to buying and selling? Because that is what we're doing in the market. All we're doing is buying and selling. That is it. You can't do anything else in the foreign exchange market except buy a currency pair or sell a currency pair. So in the first diagram on the left, we can see that the scale is tipped towards the upside, just like that. So you can see if the scale is tipped up, then that is a buy. That is a buy, guys. So again, if the scale tips up, that is a buy. And that's what a scale looks like when it's tipped up from my perspective. If the scale is tipped down, so the scale is tipped to the downside, then on the contrary, that is going to be a sell. That is a sell. So if it tips up, it's a buy. If it tips down, like the diagram on the right, then it's a sell. Okay, Maren, that sounds great, but I still don't know how to relate this to me. Like right now, I'm in this trade. Is it going to go up or down? Because that's essentially all we want to know is the trade that we are currently trading going to go up or down? And this is the game-changing moment for me, guys, because I could not figure that out for the life of me. I was in pairs, I was in trades or looking to get in trades, and I would look at the currency strength, but it wasn't informing me consistently based on how I was using it, if that trade was going to go up or down. So here's the cheat sheet. If the leading currency is weak, then that is a sell. So that means if the leading currency is strong, then that is a buy. Now you're saying, okay, whoa, Maren, what is the leading currency here? Like, what's going on? I'm new to the space. Just tell me, just speak English. Okay, guys. So we know, or you should know, if you're watching this video, you should have already done your basic academy training in your 100 series on I Am Academy, and you learn all about the different currency pairs in the market. But some example of currency pairs are your GBP USD, which would be your Great British Pound versus your US dollar. You've got your USD JPY, which is your United States dollar versus your Japanese yen. You've got the euro and the AUD, which is the euro versus the Australian dollar. NZD USD would be New Zealand dollar versus the US dollar. AUD USD, your Australian dollar versus the United States dollar. And then you've got your CAD JPY, which is the one that we looked at in the example, which was your Canadian dollar and your Japanese yen. So out of these currency pairs, one of these is the leading currency. The leading, and that's very simple. It's basically the one that's first. So the one that is first is basically the one that is leading the other one. It's the first in the pair, which means it's the leading currency. Just like if this was a dance and the dance partner, the first one that you see is basically that leading dance partner. They're leading when we're talking about leading pairs, when we're looking at the currency strength meter. That would make the one after it the secondary pair. But just to bring back to our example, we were looking at CAD JPY. At the time we were looking at it, or right now, the Canadian dollar was the strongest pair, or the strongest currency in the pair, and the Japanese yen was the weakest. So our CAD, our Canadian dollar, in this example, is the leading currency, guys. You will never see CAD JPY written as JPY CAD. CAD will always lead JPY. And just like in the examples on the left, GBP always leads USD, USD always leads JPY, and so on. So you don't have to figure out, okay, well, which one's leading today. The first one that you see on your list is always how it's going to appear on your quote screen in your MetaTrader 4, on the harmonic scanner, and so forth. So this is going to help you which one to put on first. So let's go ahead and put our Canadian dollar onto the scale. We put that on first because that is our leading currency in the pair. So then we put our Japanese yen secondary. We put it on the scale at the second, on the second side, or on the on the other side. So that's the one that goes on second. So your Canadian dollar first, and then your Japanese yen in this example. So what happens? As you can see, the scale tips up, and we've learned that if the scale tips up, then that is a buy, guys. So if you was in the Canadian JPY trade right now, and this is how the currency strength looked, then you would be thinking about buying, or you would buy this pair. But there are some other things that you want to be looking for. So what exactly is that? What exactly are we looking for when we're trading? Because we know that trading is all about timing. you're basically looking for major imbalance in the two currencies. So when you go to the currency meter, when you pull it up, you're looking for the one that is the strongest versus the weakest currency. And then you want to watch it play out on your chart. So there is a little bit of kind of waiting and watching. These are all hint, clues here. But if you look at the two examples on the screen, we have the same pair, but in two different types of currency strength. We have the euro versus the pound, the Great British Pound, okay? So on the first example there on the left-hand side, we can see that our euro was really, really strong. How do you know it was strong, Maren? Well, as we've identified, the one that has the most bars, the most weight, is the strongest, and the leading pair goes on the scale first. So if we put euro on the scale pertaining to this first example, then it would tip the scale down on that side. And as you can see, the Great British Pound doesn't have enough weight on it to tip the scale down the other way. So that one would be a buy. And as you can see, it played out very nicely on the graph. You can see we have our blue buy bullish candles all going towards the upside. So we can see the market is buying because our euro was strong and our pound was weak. On the contrary, we can see because the strength of your currency is always fluctuating, when the euro became weak, so it lost all its strength, it no longer has any of those weights. But look, the Great British Pound has now gained strength. It's now picked up those weights. And what do you see play out on your chart? You see a beautiful, smooth sell. And now we're going to look at how we're going to catch the full movement of the sell, because the trick of the trade, you know, the secret sauce in trading, it's really your risk management, guys. And what you really want to do is being able to catch these full moves, the whole move, just like we saw in the last example. You don't want to just get a little piece of the pie. You know, this is going to help you now have a better, you know, longevity in trading. You want to be a successful long-term trader. So when we're talking about risk management and we're talking about this, I want you to think about using micro lots. Micro lots. What's a micro lot? Well, some of you should already know. You can learn this again in your IM Mastery Academy training, and we go over this with my team, you know, every Monday on Monday Night Live session, which is where this currency strength training has been birthed from requests from our Rich UK team here. So our micro lots are our 0.01 lot size up to our 0.09. So that 0.01 is the least amount that you can trade in the foreign exchange market on your MetaTrader 4 app. And that is the equivalent of your 10 cents. And that goes up to, like we've just said, 0.09, which would be 90 cents. So you still want to be using it in relation to what your balance is. We use 0.01 for every $100 that we have in the market. When we're talking about this type of risk management, you want to be at leverage or considerably under leveraged. What do I mean? Let's say you had $1,000 in your account. Let's look at the first trade here, the GBP USD. We've bought this because we can see that the Great British Pound is strong and the US dollar is weak. So we know that the Great British Pound is going to tip the scale down on that side, and it's going to slant into a buy trajectory. So what do? We go ahead and buy that, but we're using only 30 cents. We're using only 30 cents, but that means that we're able to withstand any fluctuations in the market, guys, and enjoy the full move. We know that the market can only do two things. It can move up or down. So when you're looking at the example now with hindsight, it looks like it went straight all the way to the upside, which for the most part it did. But while it was trying to go up, it's also going to be going back to go forward. So it's going to come down some, which might mean that you sit in some negative balance. Now, if you were using an overinflated lot size, a high lot size, basically gambling, then you probably will be scared out of the trade and take a bigger loss than is necessary, because as we can see from the strength and probably the harmonic scanner where we got this trade from, we're clear that it is going to the upside. However, if you're not using proper risk, you don't get to enjoy the full move, guys. Just like on the Euro USD trade we have here to the right. This was a sell setup, and we were aware of that because the currency strength meter told us that the Euro is weak and the USD is strong. So we have gone ahead and entered a sell. Now we've entered this sell at 0.05, which is 50 pence. And we can see that that was about, let's see, looking at the numbers, the entry numbers, and where price currently is, it's almost about to hit take profit on the diagram where it says TP, but it's already 40 pips in profits. So we've able to catch the whole 40 pips and not jump out at 2 or 3 pips, because what tends to happen when you're over leveraging is if you do hold long enough to see your blue profits again, that you normally take it at the first sign of blue, the first profit. And like we said, we want to enjoy more profits. We want to enjoy the full move. We want to be long-term, consistent, profitable traders. So I would definitely recommend the secret sauce to be able to enjoy what you've learned today using the currency strength meter, is to make sure that you are using micro lots, that you're considerably under leveraged. So another thing to be aware of when you're using currency strength and you're using the methods that we spoke about today is to always be checking the news. Now, where you can check the news, you can go several different places, but the one that I like is www.myfxbook.com, and you want to go ahead and pull up the economic calendar. I have this saved in my bookmarks on my browser, so I just have to go ahead and click on that tab. And there are others such as the Forex Factory, which are fine. I just really like my FX book because it's really, really detailed. It gives me not just the currency, but it gives me all the news in different countries. As you can see, there's many flags, and when you hover over the flag, it will tell you what country that is. But what you're basically looking at when you're checking the news calendar, you're looking for the strength of the impact that the news is going to have. So as you can see we have low impact in green, we have medium impact in amber, and we have high impact in red. So it's like a traffic light, guys. And what you're looking at, really, you want to focus on the high impact news in that country, because that's going to affect the currency strength the most. So the high impact and the medium impact is going to have a higher impact on the news, on the currency, sorry, than your low impact news. And what does that mean for you? Well, the more news that there is in that country's currency, then the more strength fluctuates. And that's what we're trading in the market, guys. That is where we're making our profits. We're making our profits off the strength fluctuations in the market. And by using this currency strength meter, you want to know, okay, I can see that the Great British Pound is strong now, but before I enter, is there any news that is going to affect the strength? Because if there is news on the Great British Pound, as you can see there was on the diagram that you're looking at, that might change the strength of that currency. So it might go from strong to weak or weak to strong. So that's another thing you want to be looking at before you go ahead and enter. This is also going to inform your times of day for trading, guys. So as you also learn in your IM 100 series basic academy training, they teach you, like in the first few videos, about the different global trading sessions. So now this should start to be kind of hitting home, because what you'll find is that the currency relating to specific countries, they'll be more active during those sessions when those countries are open. So what do I mean by that? Well, if you're thinking about, your Sydney and Australian currencies and your Sydney, opening hours, which we pair with Tokyo and we call the Asian sessions, the currencies relating to those sessions are your Australian dollar, your New Zealand dollar, and your Japanese yen. So those currencies are going to be more active during that session's opening hours. And as you can see, on the screen, we're showing you the Great British, the GMT time zone for the opening hours, which for us it's about 9-10 o'clock at night and right to 7 in the morning. So between those hours of operation here in the UK, you're going to see the most activity on your AUD, NZD, and JPY currency. So in London, what currencies are awake? Well, we've got your euro, we've got the Swiss franc, and we've also got the Great British Pound. So these are the currencies that are going to be most active during the sessions. Why? Because you've got live news happening, the banks are open, you've got people buying and selling, retail traders. We've got all that happening during those sessions. So you're going to see a lot more activity, and the currency will fluctuate during these sessions. And then you're going to be looking at the last session of the day, New York, where you're going to see activity on your US dollar and your Canadian dollar. So that's when those currencies are awake. So that's something you want to bear in mind when you're looking at the currency strength meter. This is going to also inform you on what currencies are better for you to trade during those times. So go ahead and take a screenshot of that, and I hope that makes perfect sense, because this is going to answer that question for you on what time is best for you to trade, okay? So how do we pair all this with the harmonic scanner? Because we've been looking at the currency strength, but in relation to trading with our flagship product, which is our $1 million software, what the banks use, our amazing harmonic scanner, which is already 87%, success rate on its own. But we want to always be increasing our success. And when we pair the currency strength to with the harmonic scanner, we can determine if the trade setup that it's giving us, if they are actually ready to enter. So let's have a look at how we would do that. So you guys should already know how to use a harmonic scanner. I definitely recommend that you go and you learn that. Again, here in the UK, you can get started learning that. We do it every Monday Night Live. Go ahead and go to www.sayyestoforex to go ahead and be personally mentored by myself and attend these sessions, because we trade this live every single Monday. But what you guys should be able to identify while looking at this is that this is a sell setup. How do we know that? Well, I'm not going to do a training on the scanner, not right now. I may do one, so go ahead and subscribe to this channel, because there may be a harmonic scanner training coming. But the AUD CAD trade is a sell setup. Our entry is at the top and our take profits are underneath. So we want the trade to move downwards for us to be in profit. But the strength meter that we looked at AUD CAD, and we saw that AUD was strong and the CAD was weak. That actually tells us that this was a buy. So if we went to the currency strength right now, then we would see that the Australian dollar and the Canadian dollar, it's the way how it's how it will be placed on the scale would be in a buy. But this setup is for a sell. So how do we know when it's ready to get into? So this is what you're waiting to see, okay? And the key word here is waiting. So you're waiting for this sell setup to be ready for you to enter. Entry is key, guys, when trading. This is how, you want to get the right entry time. So waiting is what you will do the majority of your trading journey. It's not just buying, selling whenever you see fit. It's waiting for the right moment, just like a hunter watching its prey. You want to be able to get that sniper entry. These are all terms you'll hear people say, because you want to be in profit, as quick as possible. You don't want to be stopped out. You don't want to constantly be in, losing trades. And then as soon as you come out, then it goes, into profit. So this is basically what you're waiting to see. So if you went to the harmonic scanner, you saw that AUD CAD was setting up for a sell. But before you do that, you're going to go to your currency strength, and you want to see the Australian dollar lose some of that strength, so that the CAD gains strength, and then it will tip the scales down. So again, what are you looking for? You're looking for the Australian dollar to lose strength. So you're looking for those weights, those bars to become minimal, almost to just one, and then you're looking for the Canadian dollar to start to gain strength. And as that starts to happen, guys, you will actually notice that the trade that you're in will start to sell, which is what we want to see happen. We can go ahead. I'm going to give you a little treat here, and let's actually see what that looks like in real time. So I'm going to go to my browser. I'm going to go first to my currency strength meter. As I said, I keep them bookmarked. I'm going to refresh. Oh, wow. Look at this, guys. You've got the Canadian dollar here, which is now, it's getting weaker. Well, it's at its weakest. And we've got the Australian dollar. So again, this is CAD AUD. So the CAD is going to be on the scale first. So there's not enough weight to push it down. So that's going to be high up in the sky. And the AUD is starting to get stronger. So it's going to start to push our CAD AUD trade to the downside. Sorry. I think I'm saying it the wrong way around. It's the AUD CAD. So what we're going to do is go ahead and look at our harmonic scanner. And as you can see, this is the setup for AUD CAD. So let's just give it a quick refresh, because this is how it works. It's always moving. So we go ahead and find our AUD CAD trade again from our list. And again, we do this every single Monday, so you'll be able to use this really quickly. So we've selected our AUD CAD trade from the list. And if we then go ahead and just enlarge that for you guys to see, you can see that from when we were looking at it on our presentation, it started to take some move to the downside. Why? Because the one currency is starting to weaken, which is the Australian dollar. It was really strong, but as it's weakening, the Canadian dollar, it also is going to start picking up strength. It has done several times this morning. But what you're looking for is for that Canadian dollar to get really strong, and then you will see it pushing down. As you can see, it's kind of moving sideways here, which is what the market does. It can only do two things. It can only move up, downwards, and slightly sideways, which is basically sideways to the upside or sideways to the downside. So there you can see in real time what the Australian dollar and Canadian dollar trade is doing. So let's just go back to our presentation. That is basically it, guys. So now you guys know how to use the currency strength meter to identify whether you're in a buy or a sell. We've had a look at this trade, and we can see that we want the Canadian dollar to gain strength so that this starts to sell towards the downside. So you guys can go ahead and keep check of that if you're looking at this in real time, but you can apply this straight away. This information that you received today, you can go ahead and pull up your harmonic scanner, pull up the currency strength meter, and you'll know how to use it to trade your foreign currency. So again, my name is Miss Maren UK here in the UK. Go ahead and you can reach out to me on Facebook at Marenike Rich Inc., or you can slide in my DMs on Instagram. I'm at Miss_Maren UK. But what you want to make sure is that you hit subscribe and turn on your notifications so you can catch any more trainings from me. And if you guys want to get started immediately and have me personally guide you through this process and mentor you, and you can also join our Monday night live sessions immediately, just go to www.sayyestoforex.co.uk and simply click join now. Thank you guys so much for watching, and I'll see you guys soon on the other side.